Hello everyone again. I hope you are well. I am glad you are in this lesson. And today we do accumulation, again as in the previous lessons. We will do, let's say, a little more basic things, then we will slowly go into details. We will not tie the big picture so much with the fact that we still haven't completed the big picture enough to complete it so that a large part could understand it. As for accumulation itself, what is most important is the very root, the very beginning of all understanding. The picture contains the structure of the market. A valid order block that must contain a complete order. Therefore, a manuscript traces on the market that completely they look the same in the previous traces that were in the form of a complete command. And after that, there must be an impulsiveness to make it an incomplete command that will later be completed with a complete command. Those are the three things: the market structure, the order block, the fractal. Those are the first three items that make up the smaller, narrower picture. And then after that comes Wyckoff and the fractal order of the blocks in Wyckoff. We will now work on that part of the fractal order blocks in Wyckoff and Wyckoff itself. So what should the accumulation scheme look like? Therefore, first the preliminary resistance begins, which is the support, the first initial liquidity that is formed in a complete order that does not exist. So what is liquidity? We talked about that in the previous lessons. Liquidity is an order, therefore it is something that does not already exist but will exist. Like some company, for example, SADA, which they sell you the phone, and only when you take over the phone, at that moment you pay for the phone. That is, only then is there actually money for them. There is real money, money volume, while before that money was only expected. So the money was expected. And then imagine when there are a million such orders, they know that they will become that money at the moment when all that. They actually reduce it to one cell over a few days through all those sales that eventually convert in volume. And then the accumulation itself is actually a manipulation of the lower levels. When we look at the preliminary support as a preliminary support, it is in accumulation, in fact redistribution, because there is an uptrend, which later impulsively forms a downtrend again, which is called a selling climax. We will explain to you once why it is called a selling climax as a selling bottom or a selling peak, as you like it. This is precisely due to redistribution. So, redistribution, when the selling climax is formed, it is the lowest level in redistribution, and only then the rest of the whole picture of distribution begins to form. And when we look at the beginning, then we will see the selling climax as the main rotation point, because based on it, we know that there is a preliminary support and a selling climax. And after that, an uptrend that forms a sign of strength or automatic reaction, depending on whether the item will be a higher level. Now, this part of the secondary test is very, very important, and we need to repeat it. So the secondary test that is formed, it is the main rotation point. However, it must not look like this, nor should it look like this, and it should not be completely equal and close to the previous selling climax. So how can that part be understood? When I observe from the beginning of buying the previous impulse that was created here from this accumulation called the selling climax, we will see that this level begins to form to a certain highest level, the most likely level that will create a resistance zone here, just like this highest level, and then one bed is created, volume in one place. After that, the secondary test just begins to form. However, the question is how long it takes for that lowest level of the secondary test to be reached. So should it be here, this lowest level, or this, and so on? It is best to understand that it should be the first 30%. If we use the Fibonacci retracement, which is otherwise excellent, if we look from the lowest level to the highest level, which means 0.5, we understand that this is starting from 0 to 100% of the value of this part here, meaning from 0% to 100% of the value of this trend, actually the highest level. The first ones, 20 up to 35% from the occasion of this trend, should be reached later with the secondary test, so that it would eventually show a positive fractal and the highest quality fractal of the secondary test, which would be equal to the previous order blocks. because in this way a lot would have to be formed, more traces in the market, if the first 20 to 35% of this trend is reached, which starts from the selling climax to form. And then based on that, we can understand that the secondary test is valid. After that, the uptrend that follows them, it is the first higher level that is transferred. So it has never become a transfer of a higher level before. It only exists now. So it is the first and only not all to convey this first initial liquidity that exists here. So everything I'm explaining is precisely for this reason, because I get errors like that. So I get errors on Viber where the accumulation with the transfer of this previous higher level is indicated. The secondary test is indicated that looks like this, which is not so negative because a large part of the trades that reach me in messages from most of you are mostly of good quality, but there are some trades that are of poor quality. I understand it better that it is a question of the psyche. And for example, the interesting thing is that mostly those invalid trades that came to me, I analyzed it a little bit myself, and now I don't believe that it's a coincidence, but they are usually somewhere around 19 or 6 o'clock in the evening. Most often when I receive completely invalid trades, the basic errors are the ones in question. And then I realize that maybe it was that the individual who made that mistake probably watched the market all day, followed the chart. And then until sometime in the evening, he probably watched it. And then he didn't see any positive algorithm somewhere yet. In the evening, he saw it. And then because of that waiting and checking that lasted several hours, many hours, psychology reacted incorrectly. And actually, the individual himself made a bad reaction at that moment because he has a past behind him that is connected to that current happening. And then it's mostly in the evening, or it happens to me, for example, when after 2 or 3 days no trades are sent, I receive a trade. That means after 2 or 3 days of sending, days of no sending, I suddenly receive a trade that is complete. And then I count that maybe before that some obligations became, and then that day somehow it was only done on the fly. I think it has a lot to do with it because it usually happens that way, and it's very interesting. Mostly trades that are, say, during the day, in progress for about an hour, 2 hours, and so on. And when those trades are sent, they are usually of good quality. I am not saying that it is only because of the volume that is formed, because then it is quite a strong volume. Why? Because then they are the biggest investment, and then the volume is strong. And then when there is a complete order that, for example, describes the quality, for example, we see that here there is a secondary test in phase B, which shows complete validity. Otherwise, our direct entry into the trade is when the secondary test in phase B is formed, when it is transmitted. The previous selling climax, i.e. at the lowest level of the previous order block, and at the highest level is such profit. Why am I saying that? Because stop loss can't stop there, it can't stop here, so profit can't stop there. Means neither at the first higher level here, but at the first initial liquidity that arose after the impulsivity that stands in this part here. Of course, that first initial liquidity is immediately above this initial higher level with the beginning of the complete order that began to form with the very formation of the accumulation. And when we look at this accumulation, it constitutes complete validity. But if the secondary test also constitutes complete validity, because it is the most important, we based on that secondary test or sign of strength, which is formed here, automatic reaction, which should be valid. Based on that, we know if in fact the accumulation exists at all. And when we look at the difference between automatic reaction and when we look at the difference between sign of strength, the difference is that automatic reaction, it must reach relative equal highs with the previous higher level. So relative equal highs with the previous higher level that starts to form a downtrend in this part here. It cannot be above. It is not called automatic reaction. So automatic reaction is in relativity. Also automatic reaction, when we look at this sale that occurs to form a secondary test, cannot automatic reaction to be at half. and only then to create a downtrend and then to call this a valid accumulation. Therefore, the highest level of the previous order block in relativity must be reached or it must be transferred. And if it is transferred, then it will be a sign of strength, and it is an even better solution to make it look like that in the end. Sign of strength can convey, it is also very important to explain, also everything I am saying is precisely because of this message. Therefore, it can transfer the liquidity that arises in order for a form of selling climax to occur. But it must not transfer the first initial liquidity found here in order for the accumulation scheme to be fully valid on the algorithm we are looking at. Can transfer this first higher liquidity and the second one, but not the first initial one that arises in this part here. Otherwise, the part that ends up as a secondary test in phase B is mostly impulsive and mostly contains Wyckoff reaccumulations. Why is it so? So, when we see the trend that emerges after the form of secondary test in phase B, we know that this downtrend that was impulsively created is actually a Wyckoff, regardless of the fact that it contains an imbalance, and we work that Wyckoff is not an imbalance. Wyckoff is not an incomplete order, but a complete one. The imbalance that arises here will most likely be a reaccumulation that contains a secondary test and then a strong impulsivity that transfers the liquidity of the selling climax. And when the liquidity is transferred, volume is created with that volume in the secondary test in phase B order block that was created from the beginning and is invested. The moment an investment is made, a trend emerges and the company actually prospers. For example, like Apple, let's imagine that now this is liquidity in which there are, for example, orders that amount to 1 million orders for a phone. In that moment, the company has, for example, $50 billion wealth at that moment when it is reached. Place of liquidity at that moment. That order that was previously turned into a volume, and then at that moment live money is created. And based on that, the company is progressing because it no longer has a budget of 50 billion, but a budget of 70 billion, now 20 billion plus. And why is this trend happening here? Because that action is just a manuscript, something investment. So only the handwriting of that company, how it actually works, and based on that, the description happens at the end. Their business. And when we look at everything, all this complete order that arises here, we can reduce it to, for example, there are many different factors, but for example, such as investing in some engineers, investing in new machines, a new product. It means all the money that goes into that one big scheme of making that one product that will eventually just go on sale, and the company will prosper from that. And that's why mostly the impulsiveness that happens and that sudden imbalance, it happens quickly because that's how it is. And it's simply a handwriting. Like if I was speaking in English now and someone was writing that in Latin somewhere on paper, so he just writes what I say. Or someone who thinks in his head creates a plan and writes it down. That handwriting has to come from somewhere. It is exactly the same here. And then when we look at the accumulation, we will see that it contains validity only in this way, no other. Which often comes to me means only in this way. All the other details that are now, we can say with that big picture, enough for most people. That demand for the big picture leads to a decrease in following the complete validity and narrow picture and details in the narrow picture. That must not happen. And that is why we are talking about this right now. So now we're going to look at some example of a completely valid accumulation to find here and explain the details in reality, how. That part works when we follow the algorithm and how there is a trend at the end. We can find it anywhere. It will be a bit awkward from this angle looking, but we will find it easily. We may not follow that there is a previous order block so that it can be found faster, because now let's not spend too much time stopping, looking, and so on, wasting 7, 8 minutes there for nothing. Let's give an example on candlesticks. So it doesn't have to be that. Now, an example of a real algorithm, you understand? So we give an example on candlesticks just to explain the essence. Let's look at this now. Preliminary support will be this order block, selling climax, secondary test, or so. The highest level that is formed here now depends on how it would look on a smaller time frame. Maybe this would also be Simon's trend, and maybe this would also be an automatic reaction. So we can't know what the algorithm looks like on a smaller time frame. Maybe this is where the trend comes from. We don't know when it started, when it ended, because we cannot know the movement of this candlestick. We can know some basics, but the candlestick can move on more, because this 8-hour period, it can move in many different ways during those 8 hours. The automatic reaction part is not as important as these lower levels that we are looking at now. And then this will be the secondary test in phase B. Look at this. What is characteristic for the first order block and for the last order block in the accumulation? The first order block is called preliminary support, and the last order block is called secondary test in phase B or spring. What is characteristic of them? The fact that there is usually impulsiveness before preliminary support. And even after the secondary test in phase B, there is also impulsivity. Therefore, it characterizes the first order block and the last order block. The trades that we follow on a smaller time frame and analyze, for example, since this is an 8-hour time frame, so we analyze them on a 5-minute or 15-minute time frame, mostly happen in impulses where a purchase needs to be formed, and not the sale that was before the preliminary support. Why? Because before this preliminary support, and we didn't have any that knowledge that preliminary support may occur at a given moment. We could not use this here MB from some previous distribution and then use that as knowledge that this impulse should have happened. But we are by position traders, and we buy with the fact that reaccumulation or accumulation and accumulation is something that has been most thoroughly investigated from our side, from my side. And that's what we follow the most, considering that we understand all the possible stages. And also, it is much better to follow the stock market with purchases, because the stock market is generally progressing and the stock market is mostly in an upward trend. And then it is best to follow by positions, much better than sell positions, because you can easily follow the fundamental analysis of when it should happen by position, when it should happen to buy compared to when it should happen to sell. And that's the reason of the most common return trade where the purchase should take place. When we look at this impulsiveness of the former, she doesn't mean anything to us. But the impulsivity that happens after the order block of the last secondary testing phase B, she means a lot to us, because we have a bias that the trend should happen. Thanks to this order block, because accumulation occurs in a downtrend. Thus, accumulation occurs when sales are formed, an order block is created, and after that a purchase is formed. This is the most common view, accumulation. And valid accumulations, in order to trade and to enter the order block of the secondary testing phase B, must be formed in the uptrend. And that is rare, because in an uptrend we usually see an occurrence reaccumulation. When we look at the trend that looks like this, out of, say, these 5 order blocks, one could be an accumulation, which means that if this order block is formed in this way, we will now place it here on a smaller time frame as preliminary support. I should have enlarged this a bit since I can't write well. So we follow the uptrend and observe, for example, this order block, and we look at what happens on a smaller time frame. On a smaller time frame, we see the form of preliminary support as the first order block that does not contain an imbalance. Why? Contains, but in the form of purchases, while this opposition was in the form of sales, which means that valid accumulation can only be traded in an uptrend. Why? Because then we have a limit where there should be a stop loss, because that trend that happens with equal fractals, and if equal fractals are in that trend shouldn't be in contrast in the form of sales. So it should not be changed to a downtrend because it exists, more likely to be an uptrend given that an uptrend is constantly forming. Of course, the probability that the uptrend should continue can be monitored based on an even broader previous picture. So let's see if this phase of a larger time frame. But the most important thing we explain is that the fractal size must be equal in all order blocks. When we look at the candles here, these candlesticks, they all have the same fractal. Why? They are of the same volume. They are similar in scope and last exactly the same. And all these order blocks were formed exactly in the way we were taught. Therefore, impulsivity also begins to form a preliminary support until the secondary testing phase B, which creates impulsivity again. With that accumulation, which happens from a downtrend and not from an uptrend, we can only use it as a purposeful one to track smaller order blocks and a smaller fractal which exists during this trend, while as the accumulative form itself, to enter that trade, to make a purchase, we can only do that if there is a previous uptrend. And then selling climax, secondary testing phase B, maybe spring, although it is not that common and it is not even that good to form a spring, with the fact that our entry into the trade is directly when an impulsive downtrend arises and when the secondary testing phase B is formed. So this is exactly what the scheme must look like in order to be able to trade. Also, when it is formed before transmission, liquidity from the selling climax, when that liquidity should be transferred, there must not be an order block here that creates a large fractal and later creates a downtrend. And then let's say that this is a selling climax, that this is a secondary test, and that only here there is secondary testing phase B. We must not see a huge difference in the fractal when a downtrend should be formed that conveys the selling climax before the selling climax is conveyed. This is very important as far as accumulation is concerned. Now we will look at another example like this. Maybe we will find it. In the main example that I follow, it is reaccumulation with the fact that I trade it the most. As for the accumulation, there's all kinds of stuff on Discord, on the Discord channel that we've been following, so you can check it out. But mistakes in narrow pictures must not be made. They can be made in wider pictures, because if you make a mistake in the wider pictures, then you will only make one mistake, and that is to increase the bad risk. But the bigger picture, when you get it wrong, then that risk should actually be zero. There should be no risk. And it is risky. So only mathematically, with a simple calculation, it is possible to see what the actual differences are between an error in the broader picture and an error in the narrower picture. Because you can certainly profit from the narrow picture, and the narrow picture is the structure of the market. When I say the narrower picture, I think of the market structure, order block, fractal order blocks. Let me explain just one last time. So the short picture, the name of the short picture is understood as the market structure, order block, which must be impulsive and which must contain pre-impulsivity, completely orders or impulsivity of the presentation of the preceding complete orders. There must be a transfer, and there we have the first three items. The structure, order block, and fractal must be of the same size as the previous order block. And then in that order block, we have to see Uikov, which contains the tags preliminary support, selling climax, secondary test, silo strength, secondary testing Facebook, which must be impulsive. And after that, uptrend. And then when we look at the difference, this accumulation, we can only trade it if our risk reward does not amount to more than 2%. So when we look at the very entrance to this trade here, when we look at the selling climax, there can't be more than 2 here, 1.23. So that's great. But for example, to form a selling climax that reaches this level. And then we always wait for the transmission of the selling climax to enter the trade. We would not be able to in this case because then the take profit would be 2.66%. It is also a very important rule that must be written down. And then it must never exceed 2% of accumulations to be able to be a targometer. The stop loss is at the lowest level of the previous order block. The entry to the trade is on the transmission of the selling climax. When the secondary test is formed and Facebook already creates a valid secondary test and takes profit at the highest level of the first initial liquidity, not there but there. So never, for fear of whether the trade will be profitable, place it there, because that fear is mostly in that moment. So money is actually a statistic that happens much later. And then that day, even if she is lost, there is no need to worry. So one day has no significance. That's what I wanted to explain about accumulation for this lesson. I will stop recording the lesson now.